In this video, we'll be looking at how to identify a trend. So if you consider the example in front of you over here, we have a breakout from the prior range. We just covered ranges, so you know exactly what to expect over there. Then price pushes right through that level, breaking structure, creating a higher high. It retests that level of support and then creates the next higher high, followed by another higher low. And so that trend continues, hence the word trend, right? You can put in a very simple trend line over here and you can see that price is generally moving up over time. That's the key word. It has to be consecutive higher highs and higher lows, backed by momentum, right? So price is backed by momentum and consistently over time, it's creating multiple higher highs and higher lows. That is your criteria for an uptrend. The same is true when you look at a downtrend. Here's an example of a downtrend. Price is capped within a range. It then continues to consolidate, breaking through the bottom of that range to start what could be a downtrend, right? Creating a lower low. You then create your next lower high, followed by the next lower low. You now have consecutive low lows with the next lower high, consecutive low lows and consecutive low highs. That is officially the beginning of your trend, and that trend continues. Using a simple trend line, you put that in over there, and generally speaking, price is moving towards the downside. So that is an uptrend, that is a downtrend. It's really as simple as that. You don't need to overcomplicate it. Now, where people get confused is on the real charts, looking at live charts and multiple different time frames. So we're going to have a look at the live charts, and I'm going to show you a couple of very easy ways in which you can identify the trend so as to avoid that noise and confusion. Having a look over here, we have Bitcoin on a high time frame chart. This is a 3-day chart, and just at eye value, I want you to simply just look at the chart and ask yourself this section of price action over here, which way is that generally going? I'm sure many of you can identify it's generally towards the downside. That is the point of using a trend line. Trend lines help you to gauge the direction of the price action, and a trend line doesn't have to be perfect, right? It's generally to help you identify the direction. And in this instance, it's moving quite clearly towards the downside. So let's make that nice and big. General price action towards the downside. Now it starts to move sideways over here. We just covered ranges, so you understand ranges. Price then ranges. Once it leaves the range, it starts to establish what would be a new trend. And you can see clearly it's going to be this section here, right? Higher highs and higher lows. Again, if you are confused, just use a simple trend line and you don't need to overcomplicate it. You put that in over there, touching as many pivot points as possible underneath the price action. There's your lows. Higher low, generally moving towards the upside. Do the same to make sure the same is true on the higher highs, and you can put in that trend line over there, touching the major pivot points. If you look over there, there's your first high. Look at the next one. It's higher than the first one. Your third one, higher than the second one. So generally speaking, the trend is moving up. Higher highs and higher lows persist and continue, and therefore, this is a primary example of an uptrend. Now, many people may get confused on where these uptrends begin. Now that you understand how to recognize a trend, in the next video, I'm going to be showing you how to find the very beginning of that trend and how to identify when there's a break of structure.